Hey guys, what's up? This is Andrew for TRENDLINES.com. So welcome to the first video of the year 2022. So first thing guys, Happy New Year to you all. I wish you health, success, and of course to make a lot of money. So my good resolution for the year 2022 is to pronounce the word analysis properly. Analysis, all right? So let's do some technical analysis today guys on AMC GameStop. I want to go through everything that happened actually last year. It's going to be a bit deeper than only technical analysis. I want to go through the global market as well and try to understand why, economically speaking, we had this strong moves on the meme stocks, which we saw some big moves down at the end of the year. So let's try to see if this is going to keep happening and what we can expect for 2022. Let's get into it. Alright guys, so I'm gonna be quick on the TA. Let's start with the AMC. So I'm on a weekly time frame guys this time because once again I wanna show you guys what happened last year. So I haven't posted any video for quite some time guys because I was in the process of moving, I was with my family, it was a bit complicated, but I was still active on Discord for those who are following me there. And so I'm going to show you guys what happened the last day of the year. But the first thing that is important to say guys is that we went up by 1,200% in the year 2021. So the main reason behind that was the unlimited flow of money guys that was printed by the Federal Reserve. So we're going to analyze that very soon. So this is a great success. Even if we finished the year a bit lower, this is a great success that needs to be told. Then if I go on a daily time frame guys, in the last video I posted, I told you that we broke out from the triangle here. I think I did my last video when we were here and I was saying that 24 won't probably hold, that we would go to 21 before bouncing back. All right, this is what happened here guys. And right now, when you are on a daily time frame guys, we were having some very nice things happening on Thursday with a strong move up, plus 7% during the day. We were finally trading above this 20-day moving average that was here acting as resistance. As you guys can see, we never closed above. We always played. We tested it many times, but we never closed above. And then we closed above on Thursday. And what happened on Friday, guys? We went lower. So, we had the momentum with us. When I say we have the momentum with us, it means that whenever you cross, the price action is crossing the 20-day moving average. This is creating some bullish momentum, and despite that bullish momentum, we still got rejected quite brutally and finished the day at the low of the day. The volume was not impressive because during the last week of the year, traders are not very active. So, we are still above 27, which is good. All right, 27 is the short-term support, but there are different scenarios that might happen here. The first scenario is that unfortunately we don't hold above 27. This scenario is not nice guys, all right, because it would mean that we have only completed an ABC here, only 3 waves. Whenever you only go up doing 3 waves, not 5, this means that the bears are in control, all right? Whenever the moves up are developing 5 waves, like I want to see, like 1, 2, 3, 4, 5, then it's very good for the next move. Then usually it moves down in 3 waves and then you go up again doing 5 waves. Here, I don't like what is happening, and to be honest guys, I'm not sure what's going to happen next month, but what I know for sure guys is that we still have the money in the economy. So first, let me conclude on this technical analysis. If we break 27, it would be something like this. Here we did 1, 2, 3, 4, 5. So you see, we developed in 5 waves on the downside, all right? So it can be many things. It can be a first impulse. It can be a C wave and 5 waves, impulse and 5 waves. But it means that bears are in full control in here. To really stop the bears, we need to develop in 5 waves on the upside. For now, we almost did it, but we didn't manage to do a 5th wave. So if we don't do it, then unfortunately, guys, we might see a 5-wave development again on the downside with the next support. I'm here to tell you the truth, guys, all right? I'm not here to tell you that everything will be fine, whatever happens, all right? I personally do believe that good things are going to happen, but I think maybe a bit later. It will depend what happens around this 27 level. But I give you first the bearish case, all right, so that you are prepared. It's not my preferred scenario, it's one scenario, all right? But at least we do it, then we're gonna do the bullish case. So here, if we break 27, we can still bounce back, all right? We have some support at 25, but let's be honest, it won't be looking good because it would mean that we didn't manage to do 5 waves on the upside. So maybe we're gonna have a longer correction here and then move up, but it would not be a good signal technically speaking. So if this happens, 25 is the next support, but I think it's weak. And unfortunately, we might develop lower and the next support level, if we start developing 5 waves, doing 5 waves on the downside, the next support level is here, guys, around 15. We have the lower level of the gap that is at 16. So 15, 16 is the area of support. And when you go on the weekly time frame, you can see that we have here the 200 week moving average coming here. So it's not a very strong support or resistance, but it's a level that is important to keep in mind. So this is for the bearish case, okay? Now, the bullish case, guys, which was my preferred scenario on Thursday, but after this strong moves down, I'm like 50-50, so let's see what happens, is that we complete, so this is not an ABC, the bullish case is that we do 1, 2, 3, 4, 5, like this, guys. So to do that, first, we need to have a good reaction on Monday, and we need to break. Right now, we broke the 20-day moving average, didn't give the good result expected. So I'm not sure exactly what we need here, but we would need probably to go above the trend line, so above the 30 level, you know, something like this. And then we would have 32 as a strong resistance, that is the 200-day moving average. So, you know, we have a lot of struggle in this area, but that we can go through. So it will depend on what happens on the rest of the market. So if this happens, we will probably go to 37, but this, and then do a small ABC, okay? This would be the, you know, kind of normal scenario, ABC, and then starting here in Feb, we might see some strong moves up. Okay, so those are my 2 scenarios. Of course, I am I mean, the bullish case is my preferred scenario, but let's be prepared for anything that could happen. And even if we go to 16, my personal conviction is that this move, like I mean, the meme movement that started with AMC and GME will not be over. Why? So first, I'm going to tell you my view on the SPY very soon, because it's important, because each time AMC moved strongly higher, the SPY was moving lower. But first, yeah, I think it's time to talk about that. Let me show you first my view on the SPY very quickly. I'm not going to spend too much time here, but it's important, guys, that you are aware of that. So basically, 2022 will be very challenging because, as you guys probably heard, the Federal Reserve will increase the rates, all right? The short-term rates from 0.25%, 25 bips, to 75 or maybe 1% at the end of the year. So whenever the rates are going higher, it makes things more difficult. There is less free money. You need to pay to borrow money. So, you know, it just slows down a bit the mechanisms in the economy. So it's not good for the economy, let's be honest, but we need to, at some point, put the rates higher. Otherwise, whenever the inflation is going too high, it's not sustainable. So we have inflation coming, so the rates need to go up. This is the problem that the Federal Reserve is facing. And my view on the SPY is that we were developing here, doing a 1, 2, 3, 4, 5. All right, this is the end of the COVID crisis. The low March 20, 1, 2. So I think we are completed the 3rd wave. So a 4th wave is coming, guys. A 4th wave that will be quite, I think, long in time. Like the 2nd wave lasts 2 months, roughly. So we can expect a 4th wave to last 2-3 months, maybe even a bit longer. And we arrive, I think, when I do my countings and everything, we arrive at the top of the 3rd wave very, very soon. I think we might have 1 or 2 more moves up. So basically, it would start in 1 week or in 5 weeks, something like this, between 480 and 490. So the correction, I'm talking about the correction on the SPY. And once again, and this correction would last probably 2-3 months, and then we would strongly bounce back. So let me a bit develop what I mean here. First, as you guys saw, I posted that on Twitter. You can check it, Trading Sciences. This is my Twitter account. I'm not very active there, but I posted this information that I think is interesting. And you can see basically here, you've probably seen that already, but let me show you quickly again. Whenever AMC moves strongly higher, so the green arrows here, the SPY was starting with a move down, and we can see that the correlation, which is the blue curve here, each time AMC moved strongly higher, the correlation was going down and was most of the time negative, especially here in Jan 21 when we had the first real squeeze. May, June 21 as well, but even before, it happened 5 times, right? And the reason behind that, guys, is that hedge funds are actually having a lot of long positions on the global market. And whenever the global market is going down brutally, suddenly, they are facing margin calls. So whenever they face margin calls, they need to close some of the positions that consume the more margin. And what is consuming the more margin on the balance sheet, guys? It's AMC. Why? Because whenever the more risk you have, the more consumption of the higher the margin requirements are, because you need to, show some money in case you make some losses. And there is no position that consumes more than a short position on AMC because the loss is unlimited, and we saw what happened last year. So of course, whenever you bear a short position on AMC, you need to show a lot of money. So whenever the market is crashing, you need to once again close the positions that consume the more margin, and AMC GME are part of those positions. So they would rather go to those positions to be able to keep their long positions. This is how hedge funds are working. So let me sum up a bit what I've just said. I expect the SPY, like I showed you guys, to take a downturn because the rates are going higher. And once again, guys, I showed you that on Discord. So here I have a lot of information. But in 2016, we had the same phenomenon. And you can go and check it out in 2016, January. A few months after they announced that they were doing the tapering and that the rates were going higher in 2016, 5 years ago, the market took 1 or 2 months to crash. All right, so now it's been 1 or 2 months. We are aware that the rates are going to go higher, so we can expect the market to correct soon. And this is what I get as well when I do my Elliott wave countings. As you can see here, 1, 2, 3, 4, 5. We are developing in the 5th wave since October 21, and 1, 2, 3, 4, 5. We are in the 5th of the 5th. We are in the 5th of the 5th of the 3rd, something like this. So it's not very precise, but it gives me good information. So I think that the global market will dive. This can give us some nice reactions on AMC, but it's going to be complicated for AMC to really squeeze and hold for long whenever the market is crashing. So we would need probably to wait for the rebound, the 5th wave of the S&P 500 of the global market. That might happen, I don't know, maybe in March, maybe in April. I think we need for that to wait for this event to happen, so this bull market to start again, before seeing the meme stocks coming higher again. So this is what I wanted to show you guys. And why do I believe? So basically what happened in 2021 is that once again there was this unlimited flow of money, and right now there is the tapering. What is the tapering, guys? It's just that the money that has been printed is not going to be the quantitative easing, which is basically some asset repurchasing program, which means the Federal Reserve is buying a lot of assets to banks, to some big companies, even now by using bonds, and to make the flow of the money easier, quantitative easing. And right now, they're not going to destroy this money. Let me show you something, all right? If you just tap Fed St. Louis, all right, balance sheet. Okay, so this is the information you want to have a look at. You take the first link, guys, and this is the balance sheet of the Fed. Okay, so what you can see is that they started to print money in 2008. Okay, they were at 1,000 billion US dollars, and they printed, non-stop for the past 10 years, and then the COVID crisis happened, and they printed an immense amount of money, from 4,000 billion to 7,000 billion in a matter of a few months. And what happened since then? The whole year they kept printing. We are right now at 9,000 billion USD. So it's basically roughly 50% of the USD GDP, which is $20,000 billion, if I'm correct. And so what is going to happen right now? We're going to have some tapering, which means they're going to print less. Okay, but they're not going to destroy the money. As you can see here, there was a bit of, they were destroying the money they created, all right? They did it for 1 year because all the economic indicators were very good. Right now, it's not, it is the case, but we still have Omicron that is around us. The COVID is still here. They're not in the same process. As you guys can see here, they are not destroying the money yet. They keep printing, but they're printing less. And they intend to stop printing in March. So we still have 3 months of a lot of money in the market. And then, guys, what is going to happen? They're not going to destroy this money. Look, it's going to be here for at least 2-3 years, all right? And if the money is here, so, I mean, assets are still going to stay at high levels. And we're going to see some rotations from different stocks, from different sectors. So this is the reason why I believe the bubble is coming, the huge bubble. I'm talking about that, guys, for more than 1 year. You can check my video that I posted 8 months ago on NASDAQ and S&P 500 on my channel, when I was telling you guys that the S&P will trade at 7,000 in right now, maybe 1 year. And since then, we only went higher and higher. And I believe we will keep going higher. But we have a correction that is coming, a healthy correction, maybe 10-15%. We might go to the 420 level, you know, something like this. This would make sense. So it would be a correction of 15%, 10-15%, nothing bigger than that. AMC is already quite low, all right? So maybe it won't go that lower. But let's be honest, if we have a correction on the global market, this is basically the view that I was giving you. Either we go higher and then we come back, you know, we're going to do something like this. And the real squeeze might, I know, guys, I'm always delaying that. But, you know, this is, I can't fight what is really happening. And this is my view. I give you the best analysis that I can, and this is what I think might happen now. Either we go lower then higher, or higher and lower, but we won't squeeze right now because I think the correction is coming. But once again, I believe that the movement that is on AMC and GameStop is so strong that whenever this rotation will occur, people are going to go to stocks like AMC that would actually have a lot of room on the upside. So this is my view, guys. And let's do quickly GME. So basically what has been said for AMC, which is the negative correlation with the global market, is true. The margin calls will happen the same way. Whenever we're going to see some strong moves down on the S&P 500, we're probably going to see some strong moves up on GME as well. One thing I haven't showed you guys yet is the synthetic short. All right, so very interesting. So bam, you guys know the spreadsheet. Right now we are having 30% of total short. All right, 12% on the synthetic short interest and 18.8% as of the 15th of December on the regular short interest. So total 30%, 3.3 DTC, guys. So that's a lot, but 3.3 is what we have always had, but we were at 2.5 a few weeks ago. So it means that there was some big increase in the synthetic short on AMC, which means people bought a lot of options that are closer to the money. So what I'm very interested in, and this is a good way to assess if the movement is still on, and for now it is by checking the option market and see how active it is. And right now, as you guys can see, the biggest expiry is Jan 22. We have 50 million equivalent shares of open interest here. All right, most of it comes from, as you guys know, the 145 strike. So I'm very curious to see if this is going to get rolled. For now, we have 50 million here. You can see then we have 7 million, 12 million, 4 million, and only 8 million on Jan 23. So let's see how many of those options are going to get rolled, because let's be honest, we won't probably be trading at 145 in Jan 22 because of like the current situation. So let's see if these options are rolled or not, and if people maybe go to lower strikes, which I think is better in terms of probability of making money. But, you know, it's still a good indicator to see how much people believe in the squeeze by buying this very high strike. So I'm going to keep monitoring that. But for now, the data is, as usual, guys, very hot. And anything can happen at any time as long as we start to move higher. And this is the issue we're having right now, is that we are stuck down and that bears are very active. Okay, let me go back to GME, guys. So GME, the situation, guys, is that, let's go on the weekly time frame. Bam, bam, bam. So you guys know that we broke out on the downside from this triangle. You know, I was very, sad to see that here, things were looking so great, but, we went the other way around. which is life. It happens. It's like that. So let's see what can happen from here. We are neutral between 130 and 160. If we manage to break out above 160, we would probably go test this old support that is now resistance. So something like this may happen, and let's see what can happen here. So this is the bullish case. The bearish case is that we go below 130. It's possible. Then we would probably find support at 116, which is the next support. I don't think we would really go lower than that. Let's say the lowest level we could go, I think if AMC goes to 14, GME will probably go to... I don't have any strong support here, guys. I don't know. Okay, I don't have any strong support. To me, the strong support I have is 116. So I don't think we might go really lower than that in terms of percentage. We're talking about 20%. Let's see. For now, we are neutral between 130 and 160. The two scenarios are like that. And what has been said for AMC is true for GME, guys. So let's see. I think we need a bit more time for the real moves up to happen. We are trading below the 200-day moving average, which is not bullish, guys. Let's be honest. So we need to take it back, but after this strong moves down like we had here, the market needs time, guys, like I've been saying before. So I don't think we might go right away like this on the upside. We would take some time. I don't know, either we go lower first then higher, or we go higher first and then lower. All right, so it's one of the two. And then here, so maybe, you know, in March, maybe in June, we would see those strong moves up happening once again. Why, guys? Because technical analysis, as you can see, is helpful, but sometimes, you know, it doesn't tell you exactly what will happen. But the reasoning that, you know, I personally have been using when I was, you know, a professional trader for the past 6-7 years, is that you analyze the flows of the money, all right, and try to understand what investors would do with this money. And the analysis I did with the balance sheet of the Fed, $9,000 billion of fake money that is injected in the system, and that, you know, rotates. This money needs to find a home that will rotate amongst different sectors, and you know, at some point it's gonna get back to AMC and GME. So we just need to wait for this moment to happen. Right now, the technicals are telling us that it might take some time, but the money is here and it's huge. So this is why I believe a bubble is coming. And it's going to be maybe Apple, maybe Amazon, Microsoft, Google, all the stocks. And at some point, it's going to be AMC, GME, squeeze, bam. So this is what is, I think, ahead of us. Last thing, GME, synthetic short, bam. It's a bit a long video, I know, guys. It's big. 7, it's at 7, guys. So you see, I mean, it can happen anytime, all right? It can happen anytime, whenever we have everything that is related, that is, I mean, coming together, combined, and goes in the same direction. We're gonna see, man, like, look at that. Look at this strong, like, very big open interest on the 300. It's everywhere. All right, I haven't checked GME for like a couple of days or weeks, and I haven't seen it. It has grown like that. Okay, even on the downside, it's really big. And this shows us, guys, that whenever, you know, things will be all together pointing in the same direction, the squeeze will happen. That's it. End of the question. So guys, that's it for today. Once again, I wish you a very happy new year. I will keep doing these videos, guys, until the squeeze happens. Right now, I'm working a lot on the training, a full course about technical analysis, about everything that I've been using at work when I was a trader. It's going to be some PDF, it's going to be some videos. I'm going to send you guys everything once it is ready. It is not yet. So I'm working a lot on that. I'm still very active on Discord. If you guys want to see, come in the free area. You know, you can chat, you can ask me questions. I will answer. Maybe not right away because, you know, I need to take care of all the members as well. But I'm gonna be here and I'm gonna start very soon, guys, to do some live trading on Discord, of course, but on YouTube as well. So, you know, even if you're not on Discord, you can. You're going to be able to see that. I'm going to apply the methods that I'm talking about right now in my course. And I'm going to keep, of course, updating you guys on AMC GME every weekend. So that's it for today. Once again, guys, I wish you a very happy new year and stay close to shore. I'll see you guys.